Facebook under fire. This after reports of another privacy scandal involving the social media giant's 1 billion users. Julia Borston's got the latest developments from L.A. Julia.
Well, Senator John Thune, chairman of the Commerce Committee, just now saying he plans to ask Facebook for additional information about the New York Times report that user data was shared with 60 device makers, including Apple, Samsung, and BlackBerry. The New York Times article saying Facebook gave device makers data about users and their friends without explicit consent through partnerships designed to integrate the social network's features, such as messaging, like buttons, and address books. Facebook saying the data was simply shared to give users access to their Facebook accounts. Facebook's VP of Product Partnerships, Ime Archibong, saying, quote, contrary to claims by the New York Times, friends' information like photos was only accessible on devices when people made a decision to share their information with those friends. We are not aware of any abuse by these companies. The New York Times Attorney General Barbara Underwood saying that news of these partnerships are another reminder of unanswered questions regarding Facebook's misuse of consumer data following the Cambridge Analytica scandal. Now, this New York Times report and the question it raises about whether Facebook violated its commitment to the FTC to protect user privacy again raises the threat of regulation. And it comes amid another question and criticism from the New York Times, a report that Facebook hosted political ads masquerading as news stories in early April, stories that were aimed to influence the California congressional primary election. Facebook responding to this by saying that since then, it's rolled out a number of changes requiring issue and political ads to be labeled and advertisers to be authorized. They didn't start enforcing those changes until late May. Melissa, back over to you.
All right, Julia. Thank you, Julia Borston. Well, this is just the latest scandal to hit Facebook, but the stock has remained basically untouched. If anything, it seems like the company has weathered the perfect storm of events. Despite incessant fake news accusations, a string of data privacy issues, and the possibility of even bigger crackdowns from the EU, the stock is still up 27% from its 2018 lows. Our next guest believes that while an even bigger storm is coming for social media companies, that Facebook could, in fact, ride out the dark clouds. Roger McNamee is the co-founder of Elevation Partners, and he joins us now. Roger, it's always great to speak with you.
It's great to be on. How are you?
Good. At one point, we talked about Facebook, and you didn't like what was going on. You thought this was going to be a problem for the stock, but you still held on to shares. Where is Facebook in this whole data privacy issue?
Well, so I think that their explanation today does not hold water for a couple of very simple reasons. The most important of which is that Facebook is really good at complying with the letter of regulations while ignoring the substance. And in this particular case, the reason that matters is because 60 hardware companies had access to essentially all Facebook data, and Facebook did nothing to check what they did with the data once they received it. So it is absolutely true that Facebook's terms of service would have prohibited them from doing anything with that data except to deliver Facebook. Facebook was not in a position to monitor them after the fact. And so this is a huge data privacy issue. Mm-hmm. And perhaps just as importantly for Facebook, it appears that they misled Congress when asked questions about whether there were other things like this. And so I think that this is, if you will, part of a cultural problem that's going to be with us
right
until there's either more regulation or until Facebook radically alters its behavior.
I hear what you're saying, Roger, in terms of what the company faces itself. But do you think that maybe the worst is behind the stock?
Well, I think the stock is actually pretended as though nothing's happened yet. And that's a completely reasonable thing for investors to do because the risk of regulation in the United States is very low in the near term. And the regulations in Europe, the Global Data Protection Regulation, which just went into effect, is something that Facebook and Google are going to manipulate and do their best to prevent from, having any impact on their business. So I think investors have made a reasonable call, but I think it would be wrong to assume that just because regulation hasn't happened yet, that it won't happen, because the political pressure is getting greater and greater. I mean, let's face it, we're trusting Facebook and Google and Twitter with our midterm elections this year, right? We haven't regulated them. So if something goes wrong, there'll be nowhere for them to hide.
Hey, Roger, it's Dan. The Screen Time app today that was released by Apple at their WWDC was pretty interesting. The first app that they had up there on the big screen was Instagram. I mean, could this be a sort of perfect storm when you take all those other issues with regulatory that's going to be coming down the pike, the fact that we also have this other social issue about screen addiction, and Facebook owns, what, 2 or 3 of the most used apps. Is this going to be a big story in 2019 where all of these trends converge on companies like Facebook?
Well, I think this is the question that we all face. I mean, these companies have become immensely successful through behavior modification of billions of people. And we have to ask the question, should there be any limits on the ability to manipulate what people think and what they do? If the answer is no, these stocks are going to the moon because they do it better than anybody in history. If the world decides that it's uncomfortable with behavior modification, then there's going to be a day of reckoning.
Last quick question, Roger. In just the past 15 or 20 minutes or so, we learned that Twitter will be added to the S&P 500 on June 7th. So we're going to stay in the social sector, but play Would You Rather. Would you rather right now, Facebook or Twitter?
Facebook.
Facebook still, and you
I
still
think
own
going into the
Facebook.
S&P 500 will give them a bounce, right? But, Facebook's business is just a lot better than Twitter's business, and the stock valuations do not give enough of an advantage to Twitter to offset the better position in Facebook.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.